Right. Start. Right. Okay, guys. Good morning and welcome back. Start the class. We are in second introduction to finished books of original and the finish everything in a proper manner with questions and the other thing. Today, I'm going to do the next part in the second lesson, the final part. So, it's all about the depreciation, right? So, when it comes to the depreciation, it's really important. It's all about non-current assets, right? So what is the term called depreciation? Right? Let's see learning objectives. Explain the causes of depreciation. Distinguish between straight line and reducing balance method of depreciation. I'll explain simply. Calculate and record depreciation in the books of accounts. Calculate and record profit and losses of non-current assets is regarding the selling, right? So depreciation is very important part in accounting. There are two methods of depreciation: straight line and reducing balancing. Depreciation links closely to the accounting concept of consistency and accruals, right? I'll explain it when it comes to the accounting concept, right? Okay, now simply, you know, right? When it comes to assets, right? Assets are the things belongs to the business. There are two types of assets: current assets and the non-current assets. When it comes to current assets means the assets we expect to sell or convert into cash within next 12 months, right? So it means like uh, simply usage is lesser than 1 year. Non-current means, right, assets which we expect to use more than 12 months for a longer period of time. There is no any intention to resell, but we can resell if we need, we can resell. But when it comes to non-current assets, usage nearly like our expectation is more than 1 year. We expect to use it more than 1 year for a longer period of time. There are different kinds of non-current assets, right? I can take like land, building. Is now in a land sale business, lands are not non-current assets, it's the current assets, right? For land selling business, their stocks are land, so the expected usage is less than 1 year, right? So it's depend. Now when it comes to motor vehicle, right, in a grocery stores, motor vehicle are non-current assets because it's expect to use more than 1 year. But in a car sale business, uh, cars are, which now think there are two cars in the car sale. One car is for the usage purpose, for the car sale business, like business activities. They for the transportation purpose. There is another car for the selling purpose. Now the selling purpose car is a current asset because it's categorized in under stocks. Now think in the car sale there is another car for the administration activity. It's a non-current assets, right? Which expect to use more than 12 months. Then we can take like furniture, right? So then we can take uh, equipments, right? Then we can take, other than that, we can take like fixed deposit. There are two types of fixed deposit. Now uh, we can start a fixed deposit. Fixed deposit means we can fix your money for like 2 months, 3 months. right? It is a current assets, right? So within 3 months, 4 months, it is matured. But if we open a fixed deposit for 2 years, 3 years, it is a non-current asset. And long-term investment, right? So if we can invest, so there's another thing called goodwill. We learn in future. I mean, don't worry about that, right? Now, when it comes to these things, for these three things category, we name simply call as property, plant, and equipment. These things are another thing, PPE. These things are subject to depreciation. Subject to depreciation. Depreciation, I'll explain what is the term called depreciation, right? Subject for the depreciation. Still, you don't know what is the term called. Now, when it comes to land, it's not subject for the depreciation. Simply, what is the term called depreciation? When we usage, the value decreases. Now, think you purchase a car for 60 lakhs. Let's take from Sri Lankan 60 lakhs today. Sorry, during 2020, 20, like you purchase a car 2020 for 60 million. Now, by the time when you are using the, because of that, you can identify there's a wear and tear and decay, right? Because of many reasons, right? So, if you want to sell it again, you can't sell it again. Now, you purchase for 60 million, 60 lakhs, let's say 60 lakhs, not million, right? You can't again resell it for the 60 lakhs. Why? When you use it, the value decreases, right? So now think you purchase now this is your phone. Now you got it for like think 60,000. By the time you can't sell it for the 60,000, right? So after 1 year, you need to give it like 40,000 because of the usage, and because of other iPhones, there's new interventions, right? So iPhone 15, 16, 17 in futures, right? So when the new things are coming, it is outdated, right? So because of that, you can't sell it to the same price. Now you need to, because of that, in the accounts also, by the time we need to decrease the value. That is the term called depreciation. But there's another thing you need to remember. Just remember, but there's another factor. Sometimes, because of market reasons, the value can be increases. You can take the best examples nowadays in Sri Lanka. In Sri Lanka nowadays, vehicle prices are higher than the purchase price. Now think you purchase a car of like think about Alto, Indian Alto, for like 20 lakhs around 2018, 19, right? Now it's almost 40 lakhs. Though by the time when you're using it, value should be decreases, but the market price is increased. Market price is gradual increase because of why? Import restriction. Why? Now cars are not bringing importing to Sri Lanka. We are not manufacturing cars in here, so we need to import from Sri Lanka. But because of the dollar crisis, the government banned the vehicle importation, right? Now because of that, the existing vehicles uh, prices gradually increased. Understand? It is another factor, right? So if so, now think you purchase a car for 20 lakhs. Now the car price is 40 lakhs. So we need to adjust it for the market value. We call it as revaluation. You learn it in future. But just think in here, there's no any market thing like this when it come when because of now think that because of like import restrictions or anything. So just imagine like in here, no any market value market value gradually increased, right? Just ignore the market value, right? So if the market value increase, we need to revalue and adjust it to the market value. It's a separate thing. There's a term called revaluation, right? Now in here, don't forget about the market value. See, simply think by the time when we are using, the value decrease, right? Hope you got the idea. Now let's see. Right, causes of depreciation. Right, non-current assets such as machinery, motor vehicle, plants and equipments tend to fall in value, depreciate for various reasons. Simply, depreciation means fall in the value, not the market value. Market value, it's a separate thing, I told. These reasons are described more fully below. Physically depreciation. Physically means you can see like physical. Now think this pen. You can see the physical depreciation. Why? No, because of different wear and tear. Non-current assets are describe how above eventually wear out. Some last many years, while others may out more quickly, wear and tear. Erosion, rust, rot, and decay. Equipment may be eroded or wasted away by the action of wind, rain, sun, and other elements of nature. The materials in vehicle or machinery will rust away. Woods in the rot eventually, right? Wood will rot eventually. Decay is a process of caused by elements in nature and a lack of proper attention. Likewise, these are the physical factors. Physically, because of this one, the value decreases. Economic factor. Economic factors are the reasons of a asset being put out of use, even though it is a good physical condition. Though the physical condition is good, sometimes because of economic factors, the value can be decreases. The two main economic factors are obsolescence and inadequacy. Obsolescence. So this occurs when an asset becomes out of date due to advanced technology or a change in process. I told you because of the right, because of the like I told you, like new interventions, right? For example, in the car industry, most of assembly work in now done by robots. Computer hardware and software tend to uh, go out of date very quickly and need to update and replacing regularly, right? Inadequacy. This arises when an asset is no longer used because of the growth and change in the size of the business due to new regulations. The transport industry is now able to use much larger vehicles than before, resulting in many business selling off their small vehicles, right? So that's why there is another thing called because of the economic factors, right? So there are two main physical factors because of why the value decreases: physical factors and economic factors, right? Both the obsolescence, right, and inadequacy do not necessarily uh, mean that an asset is destroyed. It merely put out of use of the business. Another business will often buy it. So just means it's not the asset is destroyed, it's merely put out of the use of the by business. By the time when we use it, we need to remove it from the business, right? When the value decreases, right? So the time factor, the asset have a legal time fixed in terms of year. For example, a lease, a business may decide to rent a property for 10 years. So it takes out a lease, right? The lease agreement is drawn up between the parties. Each year, a property of the cost of the lease is depreciated until the lease expires and the value is nil. In such situation, the term amortization may be used instead of the term depreciation. There's another term called amortization. So when it comes to lease, don't let's understand it later. Right now, the thing mainly I want to tell you. So for all the assets, so sorry, for some assets, they have a legal life fixed in terms. For it's about the lease. When you obtain a vehicle through a lease, is the thing it's applied, right? Okay, next one, depletion. Some assets are of a wastage nature, such as the extraction of raw materials from mines or quarries, or oil from oil wells, right? Some natural resources are often sold in their raw state to the business of for processing, providing for the consumption of the asset. Of the wasting character is known as the provision of depletion. Depletion, when a quantity of something is gradually reduced or nearly all used up. This is about the like natural things, there is a depletion, right? Okay, method of calculating depreciation. So before that, right, I'll explain. Let's write like this about the causes of depreciation, right? So I told you, just remember, lands are not depreciating. These things are subject to depreciation. Subject to depreciation. Now, sometimes you may have, now why the land is not depreciation? You know, every year land value is increasing, not decreasing, right? So lands are not value is not decreasing. So land prices are every year it's increasing. That's why we are not depreciating the land. Now, depreciation is just an estimate. We can't see it from the eyes. Just is business policy. We can't see how much this was. Now you can't say now. Think you obtain a vehicle for 60 lakhs. How much depreciated this year? We can't see it, right? So it's just a business estimate. Business management can decide. Now, if the business management decide not to depreciate furniture, it's the business management decision. Mainly, we depreciate. It depends on the business. Like it depends on the business intention. Hope it's clear to you, right? Okay, right. Let's go to the other one. Let's write it like this. Causes of depreciation. Causes of depreciation. There are two things. Number one, physical depreciation. Wear and tear. Just a physical uh, reasons for the depreciation. So then you can see economic factors. Right. Write it and raise your hand. right? Okay, now, right? So, okay, now, so just simply think depreciation means decrease in the value, right? So, first of all, you need to have a clear idea about, right? Now, before calculating the depreciation method, you need to have a clear idea. Now, think this is all about the non-current assets, right? I'll take 1, 2, 3, and 5, right? Okay. Think now in your now think your father when your father buying a car. Sometimes your father is not telling I'm expecting to use it like for 3 years, 4 years, 5 years. It's not like. But when it comes to business, when the business purchase an non-current assets, they need to estimate how many duration which we expect to use it. So now think you purchase a machine. I'll go to this side, right? Right. First of all, you need to have idea about cost of the non-current assets. Cost. Uh-huh. What is the term called cost? Cost means purchase price, right? Payments made to bring the asset into present location and usable condition. It's like this. Now, the first element about the cost, right? Cost means like this. Now, think you are going to purchase a non-current asset from this is a machine, India. Now, first of all, you need to give some value, right? To now think this is Sri Lanka. Lanka, I'm not good, right? So here you are, is the India, right? You're purchasing a machine from India, right? So you gave like think 690 for this person, think dollar, right? Now it's not yeah, instantly come to your place, right? From that Indian fact Indian business to Indian harbor. Sometimes the business, the supplier will freely distribute it to here, but sometimes you need to pay. And from Indian harbor to Sri Lankan Colombo port, right? So you need to bring it for shipping charges. Then from harbor, you know, release it by paying some taxes, and from Sri Lankan harbor to your business space, you know, travel it. And once it reach to the your business, you need to pay some amount to fix it, right? So you need to give some labor charges to fix it and do some trial lines. Likewise, cost means not only the amount you gave to the purchase, other statutory payments. Till you start the usage, all other payments in the carriage inwards, harbor charges, right? And the shipping charges, fixing charges. Sometimes there can be a trial run. This is not means the repair. Repair is an expense of the repair. Once you start the production or something usage, all other repair, it's an expense. Till you start the usage or till you start the production, all other payments we added to the cost. Now think this is 10, from here to here 100, right? So here to here 50, like for the harbor charges and fixing and releasing. No, now the total Cost is 690, 10, 150. How much? The uh, uh, 750 total is that is the cost you need to identify, right? Now think the machine cost is I'll take the not the 750, take it as 800, right? All the payments. I just want to tell you, like in the scenario, think there will be another 50,000. Sometimes think if you purchase a motor vehicle from abroad, you need to pay for the government registration and the other things. Those are also statutory payment. Now think about a land. Sometimes you need to pay the deeds, charges, and everything. Cost means so like the amount we paid, right? So for the purchase and the payments made to bring the assets into the present location and the usable condition. Second thing you need to know about scrap value. Scrap value. Now let's take now the scrap value. Let's take a useful lifetime. Useful lifetime, right? What is the term called useful lifetime? Sometimes, no, every time when you're purchasing asset, you need to tell me how many years you expect to use it. So in here, think you purchase it on 2020 January. So you expect to use it 5 years. So 2021, 2022, 2023, 2024 December, I'm going to sell it to another person. Or I'm going to remove it from the business. Right? Understand? Right? The useful lifetime is the duration. Right? So in here, simply useful lifetime, right? So is the duration, right? For years we expect to use the asset. It can be sometimes uh, like the number of units which you use, which expect to produce. Now sometimes now think you are purchasing a machine to produce biscuits. Now when you purchase a machine, you can tell like from this machine we expect to uh, manufacture 50 million of biscuit packets, right? They're not, you can't say it from the years, right? Sometimes it can be a uh, like useful lifetime can be sometimes a percentage. I'll tell you, like this, right? It can be sometimes a percentage. Means what? Now you know number of years you can tell as a percentage from depreciable value. It's like this. Don't think about depreciable value, right? Now let's take like 5 years. Think about 5 years. How you can tell it as a percentage? 1 upon 5, right? Which means, 1 divide by 5. Once you divide 1 by 5, which means 0.2. 0.2 means 20%. Once you multiply, right? 0.2. If you take 10 years, 1 upon 10, 0.1, 0 now. 0.2 means 20%. 1 means 10%. It's like this. Now think, uh, I'm going to give you 100 now. like percentage means we are around we are taking to the 100, right? That's why. Now think I'm going to give you 100 marker pens, right? I'm instructing you, right? You need to like I'm going to give you five like 100 marker pins. I ask you to divide into five groups those 100 marker pins. If you want to assign these marker pins into five groups, in one group, how many marker pins will there? There should be equal amount in each group. So you need to have 20 in marker pins in one group. Why? 20, 20, 20, 20, 20, which five groups. So there should be five groups. So since there should be five groups, in and the number of marker pins should be equal. So in each group there should be 20 marker pins. Now I'm giving you 100 marker pins. I'm asking you to group into uh, 10 groups. You know, in each group how many marker pins should be there? 10 marker pins. If I take 20 years, 1 upon 20, so 1 divided by 20, which means 0.05, which means 5%. 0.5 means not, if I give 0.5 means it's the 50%. 0.05 means the 5%. Those are mathematics, right? I'm going to give you 100 marker pens. I'm instructing you to separate into 20 groups. In each group, there should be equal marker pin numbers. So in each group, there are 5 marker. Now in here, there are the useful lifetime number of years is 5 years. Useful lifetime, right? 5 years. If it is a percentage, we can take 20%, right? Number 3, scrap value. Another word, disposal value. What is the term called disposal value? Now think, after the usage, sometimes after the useful lifetime, sometimes you can sell this asset into like some value. That is the term called scrap value. Scrap value means at the end of the useful lifetime, sometimes you will be able to sell the assets into uh, like sell the asset to some value. That is the term called scrap value. Think you can sell the assets into $50. Sometimes there can be the scrap value can be zero. This is just the estimate. Understand? The amount which we can sell the asset after its useful lifetime. We take the net selling price. What is the term called net selling price? As the scrap value, we take net selling price, which means selling price minus selling cost. Those are just estimates. Now think you are when you are purchasing the assets, you are deciding the scrap value. You are in 2020, you are deciding it now. Now think you decide after 5 years I can sell these assets into $80. But during that year, there is this estimate. I can decide I should I will be I had to no, it's like this. So after the useful lifetime, sometimes it will cost around $30 for me as the selling cost. Selling cost means sometimes you need to put advertisement, TV, newspaper advertisement, TV advertisement, or sometimes you need to give broker charges to sell the asset. Understand? That is the selling cost. You will get $80. You need to bear, or you need to bond $30 for the cost. So your net selling price is 50. Receiving amount plus minus the amount you need to spend. That's why I got the scrap value as 50, just like that. Hope it's clear to you. Now, you need to have the idea about these three things. Cost, I told you, purchase price, right? Then the useful lifetime and the scrap value. Now, you can have a clear idea. I'll give the enough time. There are two methods of calculating the depreciation. The two main methods used for calculating depreciation charges are the straight line method and reducing balance. Most accountants think that the straight line method is useful, most suitable, although other methods are needed in certain cases, right? Mainly, right? There are two methods. I'll take the two. Let's use by two methods, right? Straight line method and reducing balance. In straight line method means, right? Every year the depreciation amount is same, which means depreciation means we reduce the value of the asset. Now that this is like this. Now why we depreciate? Now think, when you purchase the machine, this machine, when you are purchasing on 2020, look here, right? When you are purchasing it, you credit the bank cash book bank column 800, right? So then uh, you purchase a motor, think a machine, right? 800. Now 2020 also 21 to 2023, right? So there will be machine account balance as 800. But in 2024 year, you can see when we are selling it, right? So the machine account balance was 800. When we are removing, we remove the value. When we prepare the financial statements in this year to this year, there is a machine asset, but in this year the machine asset removed. This, our stakeholders are preferring the accounts. The stakeholders will like get afraid. Why? Especially the owners. The value, the non-current asset value drastically decreased by 800 during this. It's not fair, right? Why? During these 4 years we use it, right? So every year we need to remove the value in a systematic manner. We need to decrease the value because usage is not only in 2024, it's from 2020, 21, 22, 23, 24, during for all 4 years. Because of that, we need to remove the assets value. Understand? So we need to decrease the asset value during all 4 years. That's why we depreciate. Now in straight line depreciation, the value we decrease in every year is same. But when it's come to reducing balancing method, right? The depreciation value, depreciation amount decrease by the time. Now it's like this. In the first year, if you depreciate this 50,000 in straight line, 50,000, 50,000, no, let's take 30,000, 30,000, 30,000, let's take 30,000. Every year depreciation, the value decreases, amount is same, straight line. But if we take the reducing balance, if the first year depreciation 30,000, second year 27,000, 20,000, 15,000, 12,000, likewise the value decreases. The decreasing value also decreases. That is the term for reducing value. Hope it's clear to you. Right. Now, how to calculate the annual depreciation? Annual depreciation in I'll write the depreciation like dip amount, right? Cost minus, let's take like this, depreciable value divide by useful lifetime. Oh, lifetime. Or in another word, well value multiplied by depreciation percentage. Depreciable value means cost minus scrap value. Why? We don't need to depreciate if there's a scrap value. Sometimes in some occasions the scrap value will be zero if we can't estimate. You know, in here, though we purchase the asset by giving 800,000, at the end of the time duration we receive 50. So we don't need to the net selling price 80, 50. We don't need to depreciate for the 800,000. Why? Because our loss is not the, like, though we spend 800,000 to purchase, at the end of the time period we receive 50. Because of that, the depreciable value means the cost minus scrap value only in the straight line depreciation. Useful lifetime. In here, cost minus scrap value multiplied by depreciation. In here, cost is 800, scrap value is 550, useful lifetime is 5 years. Cost is 800, scrap value is 50. Here I told you 5 years means 20%, 20 upon, we should get the same value. 750 divided by 5, or 750, 20 upon 100. How we get, right? So 750 divided by 25, which 150, right? So 750, 20 divided by 100 means also 150. So in straight line depreciation method, right? 1, 2, 3, 4, 5. I told you 2020, 2020, 2021, 2020, 2020. Cost is 800, right? Scrap value. Every year we decrease 150 from this asset. I'll tell you how to do it, right? 150. Why? Throughout these 5 years, we use. It's clear. Now let's go to the straight line method. Now you can have a clear idea. Straight line. The method involves the cost price of the asset and estimate useful life, estimate years of its use, and the expected disposal value means the scrap value. The depreciation charges each year can be calculated cost minus scrap value number of years. For example, a business purchase a car 22,000. So think this is the cost. It is decided to keep it for 4 years and sell it for 2,000. 4 years is the useful lifetime for the number of years. Then sell it for 2,000 means the scrap value. You can see 22,000 minus 2,000, which means 20,000 divided by 4, 5 years depreciation per year. The depreciation charges is 5,000 will be charged for 4 years. If the 4 years car has not been no disposal value, the charge of depreciation would be, I told you, the scrap value is 0. So cost equal to the depreciable value. So if you think there's no any scrap value, so cost divided by useful lifetime. Understand? That is how it goes. Fixed installment method. In the examination, we may ask to calculate straight line depreciation using a percentage. The percentage is derived from the number of years of use, and the scrap value is taken into consideration. But it's just a percentage. A question may say, Mike purchased a motor vehicle at a cost of 25,000. He won't use the straight line method at 20%. Right? So I told you there would you would therefore work out 20%, means 5,000. Same, right? I told everything in a proper manner, right? So we discuss everything in a proper manner. Reducing balancing. Calculating the amount of depreciation to be charged involved deciding on a percentage amount to be used each year. This percentage is deducted from a cost price, and in the first year, deducted from the new reduced balance in the subsequent year. The illustration in example 2. You can see a machine is worth 1,000 and depreciation would be charged 20%. Right? It's like this. I'll explain it properly. In the reducing balancing method, we don't consider about the scrap value. We ignore the scrap value. Right? How to calculate the annual depreciation? Annual depreciation amount equal cost minus, right, accumulated depreciation. Is it? I'll write this. Cost minus accumulated depreciation multiply depreciation per cost minus accumulated depreciation divided by useful lifetime. Accumulated depreciation means we accumulate the depreciation. Every year depreciation we concern. This is just a estimate. Now think, if I take the first year depreciation, accumulated depreciation means the total of the previous year, right? Now when it comes to the first year, cost is 800,000. Last year depreciation 0, right? 20 upon 100 in first year. In this method, 80. Accumulated depreciation means the previous depreciation. In first year, there is no previous 5 years. How much the first year depreciation? 800,000 into 20 divided by 100, which means 160 first year. 80 divided by 5 means 800,000 multiplied by 20 divided by 100. 800,000 means 160. Every first year depreciation is 160. If I draw the timeline like this, right? 1, right? Cost 800,000, right? I told you we don't concern about the scrap value. 2020, 1021, 1000, 1000, 1000. First year, the value we decrease 160. I told you in here the next year depreciation, the value we decrease is also decreasing. If I take the second year depreciation, cost is 800,000. Accumulated depreciation is previous depreciation. Now cost minus accumulated depreciation means net value, right? So we need to get the net value of the asset. Net value means, or another word means written down value. So we deduct the total of the previous year depreciation is 160. Then we take 20 upon 100. Oh, in here 800,000 minus 100 divided by 120 method. 800,000 minus 160 divided by 5, which is 120. The second year 120. If you take the third year depreciation, equal cost is 800,000. Now this is the third year. Third year depreciation we need to deduct first 2 years depreciation total. Understand? Which means first year 160, second year plus 128. 288. You know, deduct total of the previous 2 years. Accumulated depreciation means total of the previous depreciations, right? 20 upon 100, 800,000 minus 280 divided by, right? So 800,000 multiplied by 280. So divide by 280, divide by 102.4. On same formula, right? In both way you get the same answer. Fourth year depreciation. 800,000 minus. Actually, what you need to do for this one, you need to add this one. You can take the accumulated depreciation like this: 288 plus 102.4. 288 means these 2 year depreciation. To this, to add this year, previous year depreciation, 390.4. Or you can take the total of these three: 160 plus 128 plus 102.4. The same answer, 20 upon 81.92. I'm verifying from the both way whether it's correct. 81.9. Third year 102.4. 81.9. Let's take the last year equal 800,000 minus at this 2 at this 4 390.4 plus 81 plus 81.9 470.4. You can get the total of these four: 160 plus 128 plus 102.4 plus 81.92. Same. 65, I'll write in here 5.536. So I'll round it off to the latest, right? 536. Okay, let's take the 800 minus 470 point divide by 5. 65 53 minus 55.5. You can see every year the depreciation value is decreasing. That is the term reduce. Hope it's clear to you. In second method, we ignore the scrap value. This is the how we calculate. Now still it's not finished. Know how to record it, right? To how to do other things. These things will be discussed tomorrow, right? So hope you got the clear idea about this, right? Okay. So quickly write it and raise your hand. So now I suggest like this. Use these sides. Better you can take two sides. The writing book. You have the CR books. Right from the beginning. Because I'm going to again span this. After this again I'm going to tell you how to record. Understand? So there should be more than this. That's why take 2 pages like this right from the beginning. Right? So you can do like this. First write these things in the previous page. In previous page like this. Here write this. Then in the next 2 pages take this side and write these two. Divide the page into two. First write the structure, then these two. And raise you. Right. Okay. So let's meet tomorrow, Thursday, 8:30 p.m. I'll do the other things. Thank you for the participation. God bless. Have a nice day.